All right. Hello, everybody. Welcome back to another market close. This is January 5th, 2024. It's our fourth market close of the year, and we are ending out the first trading week of 2024. Lots of interesting things happening in this current market. We're going to hear from some of our favorite friends. We got Tom Lee that just came on CNBC. We're going to get his thoughts on what's going on in the market. We've got Palantir, obviously had a pretty red day, and we're going to be talking about what's going on with them. Actually bounced back, not as bad as I thought the day would be. I did buy a little bit of Palantir, about 30 shares in the 1590s, right now at 1595, and rebounded to the 1610, but still stuck in this level. Not going worse than it was in the pre-markets at 1567, but still doing okay. Then we got some breaking news from Apple. Apparently Apple shares have fell. They were actually green for the day. Now they're down about 1% on the US government preparing an antitrust lawsuit. We just saw Google lose a lawsuit to Epic Games, and that had hints of antitrust in it. Just Google becoming too big, and that's why, they were not able to win. Potentially they have a chance to lose another lawsuit, or Apple has a chance to lose another lawsuit, which brings across just a host of more macro issues for some of these big tech companies that have to deal with lawsuits. Freddie, Mike, David, Broccoli Bob, Davis, Ben, DRPD Infos, thank you all for being here today. Jan Martin, thank you all for being here as well. David says, huge headache, pop 2 Tylenol, gonna fall asleep to this live. I'm sad you have a headache. I hope you feel a little bit better, and my enthusiasm hopefully can calm a little bit of your headache. It's hard to be enthusiastic because we got a crappy market, but we got to deal with what's going on with the market. Shout out to these 67 people that are here on X as well. We are officially live streaming on X now. So X is a thing. So for those who are on X, hello to everyone who is on X. Let's start off with Tom Lee. Then we'll get into Palantir. I already put out an episode on Palantir, so some of you guys might have seen my thoughts on what's going on with Palantir, but let's get a look at what Mr. Tom Lee has to say. He does sound a bit concerned about what's going on. So let's see his thoughts right now. Here we go.
By virtue of what's going on this week?
We're not wavering, but it's clearly not a good start to the year. I mean, markets almost got to an all-time high at the end of last year, and the first 4 trading days of this year have been really terrible. I can see what the market's struggling with because, as your guest previously talked about, part of it is when the Fed cuts, and I think people are still jumpy about a strong labor market and if inflation is softening. But our base case still remains that, we're going to see all-time highs in January. And then I think the market is tough in the first half of this year because of some of those things. But we'll overall end up strong by the end of the year.
But you're not rethinking your own outlook at all by, how, you obviously sound somewhat concerned by the way this year has started. Maybe it didn't go according to your plan. So how's that all factoring into your psyche?
Well, yeah, I think it is disappointing because, the year tends to play out in January. So the fact that we're, sort of had a failed Santa Claus rally in the first 5 days is pretty important, and the market looks like it's going to be negative, just tells you that the fundamentals, which have been improving, aren't necessarily going to convince investors to be buying stocks. So I do think it's telling us it's going to be a tough year. But the reason we're not wavering is that the reasons we think 2024 will be a good year for stocks has to do with the fact that the PMIs are bottoming and inflation's falling like a rock, and the Fed has pivoted and is now managing a business cycle. Those are really good anchors and supports for why stocks can do well, but it's not a great start. It might be much better if we were up for the week.
Yeah, well, bulls would feel better. What about this ISM services report? I know you talk about PMIs, but is that concerning to you?
Well, it's there's pluses and minuses. To me, I think the ISM services employment number and the manufacturing number show you that the labor report we got today may not be as strong as it looks, and I think that's actually good because we don't want a labor market showing signs of rejuvenation. I think the trend there is sort of softer employment growth. And from a prices perspective, I think it's pretty supportive of what we've been seeing, which is, prices are falling. And as long as housing and cars don't surge, housing growing at 3% is fine. That's consistent with 2% inflation. I think inflation is going to eventually be viewed as, approaching target and that's actually good. So, Scott, the data isn't always in a straight line. I think it's a little messy this week, and I think it is disappointing to see, but I think too many are going to be quickly turning bearish and then put on their hard landing or skeptic hat or the Fed hawk hat. And I think that's going to prove to be a mistake.
I think Tom Lee is correct here. At least so far, given the data that we have. Some people are saying, isn't he on vacation? He came off vacation just to talk. I think he wanted to give his input given some of the market volatility we're seeing right now. One of the core points that Fundstrat made was that if we breach below 465 on the S&P, then we're likely going to have a further retracement. Whereas if we can maintain that 465 level, S&P could probably inch back higher to 4,800. He thinks 4,800 is still possible in January. He's not wavering from that claim. He's just saying that there is some data that's making the market a bit more skeptical about if that could happen. Right now, S&P at 467.7, up 0.09% on the day. So S&P really not changed, even though we're going to go through a lot of the volatility. We saw Big Seven, Magnificent Seven had a pretty phenomenal day outside of Apple at the close. Got kind of smacked by this U.S. antitrust lawsuit rumor that's coming on. But S&P is doing okay. And so when you got to ask yourself, all right, so the S&P is doing all right. The markets are not necessarily selling off, but there is some data here that's getting the skeptics or the bears to be a little bit more excited about this potential hard landing. Now, one of the things we got in the jobs report was that we added 46,000 more jobs than were expected. Again, why is this quote unquote bearish? Because that means that there's probably a little bit more of a resurgence of something like inflation when you have that many more jobs entering to the system. Tom Lee's argument is, yeah, well, if you look under the hood of the types of jobs that were created, they're a bit more cyclical in nature, which means you don't really have a thriving jobs report. You have a jobs report that's okay, but it's definitely not a jobs report that's maintaining the unemployment rate at 3.7, likely going to tick higher to around 3.8%, I would say, in the next couple of months, which means if that's the case, you are still in line with the narrative that inflation is coming down, along with the variety of other factors that exist, like shelter, for why inflation is lagging. So from that perspective, it is still risk on, in my opinion. I mean, the markets have not decided that this is some abhorrent data that deserves to be punished in regards to the stock market. But as he said, the data is not always in a straight line. And if the data is not always in a straight line, then there's going to be, a bit of worry in a variety of different areas. Big Eyes Gallagher, thank you for being here. I see you in the chat. Broccoli Bob, Midwest, thank you all for being here as well. I rolled my NVIDIA 490 strike to next week at 505. Let's talk about NVIDIA as well. So that was Tom Lee. We got about 7 minutes until the market closes. NVIDIA had a just great day. And the reason NVIDIA had a great day was because they got a Bank of America upgrade. And that upgrade was to $700. And instead of me talking, let me just play the clip and get a little bit of coverage here. And then I'll talk on the back end why this is actually kind of bullish for a lot of AI names if NVIDIA gets to these levels.
Now is Bank of America senior semiconductor analyst Vivek Arya. $700 price target on the stock, reiterating a buy rating. Vivek, I guess one of the debates on NVIDIA is if there's going to be a point in the near future where they reach sort of peak growth when it comes to this big AI leap that they're taking.
Yeah, good morning, Sarah. The point we made in our note is that the free cash flow generation, which, to be sure is 24 plus 25 combined based on our projections, is just the cherry on top of what is a very delicious cake. So what are the layers of that cake? Number one, we think generative AI is still in very early stages. These cycles don't just start and end in 1 year. These can be decade-long cycles. And there is at least 3 to 4 years of upfront hardware deployment, and we are just in year 2. So number one, generative AI is still in very early stages. Number two, NVIDIA's competitive position is exceptionally strong, all the way from chips to systems to software. Number three, towards the end of the year, there is a new pipeline that they have with the B100 and Grace Hopper and other products, which will have much higher ASPs. So I think that promises more growth in 25. And then top of all that, they're able to generate very strong free cash flows. And that's really the key point made in our research, that if I look at the free cash flow generation between this and next year, it could be close to 100 billion. That leaves 60 to 70 billion dollars of ammunition for NVIDIA to go and look at inorganic opportunities, right? Because NVIDIA is a very strong company from a hardware growth perspective, but generally hardware companies are not awarded the same multiples as software companies with recurring revenue engagements with their customers. And that, I think, is the opportunity that is not being recognized, that the cash flow that NVIDIA can generate can help them look outside at engaging and partnering or even doing M&A of software companies that are adjacent to their AI business and really take them to the next level and help them get the price to earnings multiple that the stock deserves for this kind of very strong growth rates.
So his argument here is that, look, NVIDIA is a hardware company. They have a PE of a software company. They have the growth that entails that PE is maintained. But in order for them to actually sustain that PE for the long term, they need reoccurring revenue, something that comes like a software, something that would come with a software company. Here's my wild take. I think NVIDIA should acquire a company, just like the guy said. He inspired me to think of this take. And I think NVIDIA should acquire Snowflake. I think that would be a pretty damn good acquisition for NVIDIA. Now, Snowflake shareholders probably wouldn't want that. Snowflake right now is trading at what, 62 billion market cap. NVIDIA would probably have to pay 85 billion, call it 90 billion even as a premium, which is it's a decent premium. Now it's not, I don't know if that's 250 a share, which Snowflake used to be at one point. Snowflake, I think, got to like 420 at one point. But I think, Jensen Huang and Frank Sluman already know each other. They're already buddies. You got recurring revenue on Snowflake. It's growing at 30% year over year, 37% right now. I could imagine you incorporate Snowflake into NVIDIA. That might be the recurring revenue Snowflake or NVIDIA is looking for the long term. Now, I think Snowflake has ambitions of wanting to become a much, much, much more bigger company. I personally don't really see the vision in terms of their product, even though their growth is awesome, but they are a sales organization through the thick and thin, and they're a good organization, but they're primarily rooted in sales and then product. I think NVIDIA could introduce generative AI applications within Snowflake, use their sales distribution, and that would be a acquisition that would be really, really intense. Cameron says, no way that couldn't happen if they couldn't buy ARM. Well, I don't know. ARM, remember, the reason the government stopped them from buying ARM was because the government viewed it as anti-competitive because NVIDIA makes chips, ARM makes chips, and ARM makes a lot of the graphic designs for the chips. So if NVIDIA controls ARM, then NVIDIA has basically a monopoly on chips. I mean, there's obviously other people like ASML and Taiwan Semiconductor, but nonetheless, NVIDIA acquiring ARM would be overkill. So I get it. Snowflake just sells data lake houses, right? I mean, like Snowflake's just Snowflake's a software company. I don't really think there's anything that anti-competitive with NVIDIA acquiring Snowflake. I really don't. It's just software, and NVIDIA builds a lot of GPUs, but the government would probably block it anyway because the government's in a hissy fit about any acquisition. But if they were looking to do a real acquisition to have, everyone's concerned about NVIDIA is like, when is the growth going to stop? And I think for like another year at least, the growth is not going to stop, even though the growth is crazy at like 170% year over year. But eventually it will stop, and that's where you need recurring revenue from software. And NVIDIA doesn't really have that part of their business defined. Maybe they will in the next couple of quarters, but so far they would need to have something, and maybe that would be a company like Snowflake. I'd rather they buy Snowflake than Palantir. Leave Palantir for us and let it just, let it do what it needs to do. Lena in the chat says, got Palantir and SoFi too. Let's go. We're going to be talking about Palantir in a second. We got the market close in about 1 minute, and we'll discuss some revelations I've had on Palantir and this downgrade that we had. We had a nice juicy dip. Look, I bought about 30 shares. I know most people today bought at least something from Palantir. The real dip I'm waiting for is towards the 15 level, and let's see if we get there. But we've rebounded between 15 and 16 for a while, so overall doing good on that range for Palantir. But now we just have to see if it actually gets to those levels. Chris also says picked up some Palantir and SoFi today as well. Where did SoFi end actually? Where did SoFi end? SoFi 823. Wow, SoFi's down another 2% today. Well, SoFi was down about 16% this week, so it's ending out the week down almost 20%. Tough week for SoFi as well. All right, folks, it is January 5th, 2024. The stock market is now closed. We still don't have a catchphrase for the end of the day. We still don't. I think maybe I'm gonna get rid of my requirement of having to have the word asses in there, just like in the morning, because it's wake your asses up. I mean, because the reason for it is because there's just nothing that I've heard that sounds really good, So for now, we're just gonna say the stock market is closed, and well, let's see how we ended out this week. Here's Palantir, 1598 on Palantir. So we ended the week on Palantir at 1598, 1603 in the after hours, ended about 1.6%. Very happy for Palantir. I mean, Palantir could have been at $14 or $14.90 today, but it held strong. There was enough buying pressure at that 1550 range, 1560, 1570, and really it never touched below 1590 when the market opened. And, there were just plenty of buyers willing to buy it. The volume on Palantir was 61 million shares. I mean, there is a lot of liquidity for a company like Palantir. So when the downside is the downside, which today the downside was violent, just remember the upside is just as violent because there's millions and millions and millions and millions of shares ready to exchange hands. Just depends on what direction the market's going. Apple down about 181 to 181.18. We're going to talk about the lawsuit they had, down 0.4%. QQQ ended green on the day, 0.12. Snowflake ended green on the day, about 3%. SoFi ended red, down 2.8%. Palantir again ended red. NVIDIA ended green, about 2.29% of the day. NVIDIA at one point was at $495. Now it's at $490.97. So again, that Bank of America $700 target upgrade definitely got the market excited about NVIDIA. S&P 467.99, up 0.15% on the day. Marathon was down 0.21%. Coinbase was down 1%. Riot was flat on the day. Riot was down 6.49%. Bitcoin, look at that, 43,950. We're getting a little bit momentum back to that 44,000 level, but Bitcoin has kind of cooled off as well, really peaked at 45,863 a couple of days ago. Robinhood down about 0.75% on the day. Netflix was down on the day. Verizon, look at that, $40, up 2.08% on the day. Verizon, the clear winner of this week. Verizon went from about 35 to $40. Dividend yield and a little bit more of a value portion to the market. So we saw some of that growth rotation into value, and that's why Verizon got rewarded to $40. And CleanSpark at $10.21. It was down about 5.11% on the day. So it was a day that was red, but in some sectors, like the Bitcoin sectors were red. But like if you look at big tech, NVIDIA is green, S&P is green, overall indice, QQQ is green, Microsoft ended red, but barely, right? 0.05%. Google ended red, about 0.47%. Amazon, at one point it was green. Let me see if Amazon ended red. Amazon ended green as well. Tesla as well. Tesla ended up red by 0.18%, so nothing too crazy. Overall was actually a pretty okay day. I mean, considering the week, we thought, you thought maybe the week would have been much worse, but the week was not as bad as we saw, quite frankly. Austin, hello. Thank you for being here. Starting to say market close instead of open. Let's go. Yeah, I'm getting used to actually saying market close now. Get off your asses and go cook dinner. Who actually cooks dinner on Friday? Do you guys go out to eat, or do you order Uber Eats, or like do you get fast food, or who like actually cooks a meal on Friday? Because I feel like the far majority of people order food on Fridays. I could be wrong. Maybe that's an American thing. But let me know if you actually eat food. And then if you don't order food, let me know what you're getting for dinner today. Because I know you've been thinking about it. You were at work thinking, all right, this is what I'm going to get for dinner tonight. So put in the chat what you're actually eating for dinner tonight. All right, we have to discuss Apple, and we have to discuss a couple of other things I wanted to do. But before we do that, we're going to listen to Courtney Garcia from Payne Capital. She says that the bull market is going to continue. I don't know who Courtney Garcia is. She is a new analyst. This is the first time I'm clicking on her, but she looks pretty, so we're clicking on her. So let's see if she's also good at analysis. All right, here we go.
Talk of the tape, the slow start to 2024, and what lies ahead with some critical data and earnings looming next week. It's all coming fast. Let's welcome in Courtney Garcia, Payne Capital Management Senior Wealth Advisor, with me here at Post 9. Happy New Year. Welcome back.
Happy New Year. Thanks for having me.
So what's your big takeaway from the way this year has started?
The big takeaway is what we saw in October, where everything rotated right out of the Magnificent Seven that was the place to be in the early 2023. Everything has shifted now, and you're seeing your interest rate sensitive things like small caps, real estate, energy are all starting to outperform. And I think that's only going to continue as we look into 2024. And that's where you're seeing some of the euphoria with artificial intelligence is going away. People really want to see that actually reflected in earnings. I think things are going to go back to fundamentals. And that's where you want to look at some of those value opportunities.
I mean, it's not like you've had, a ton of money coming out of mega caps and going into the Russell. I mean, it's been a pretty equal opportunity sell-off. I mean, the NASDAQ and the Russell both are down about the same on the week, each more than 3%. So what is that telling us?
And I don't think we want to too much extrapolate from this 1 week. I think really if you go back the last 2 months, I think that's actually going to show a stronger picture here. And some of that is you're going to get people are just taking profits across the board right now because it's kind of interesting. But the investor sentiment levels have been overly optimistic. Yet at the same time, and we're seeing this with our clients, people are still very cautious and they're keeping their cash on the sidelines. If you look at cash levels, the end of that last week of December, cash levels actually went up, meaning even though people they're optimistic with the markets, people think the interest rates are coming down, they're still keeping their money in cash. I mean, they're not actually ready to get in the markets. They're not actually believing that those money market rates are going to go down. And it's not necessarily we're advising, but you're definitely seeing that right now.
But does that mean that, some of that next leg is going to be a bit muted because there's just not enough cash, new money coming in?
I would actually say that still leads to an opportunity because that money can still lead its way in. I think people aren't overly optimistic. They're not throwing all their money into the markets. You're not seeing that euphoria. I actually think that could lead to a further upward trend.
I think she's right about that. Like I mean, she's kind of in the Tom Lee camp, which is that, look, the euphoria has not hit the markets. We haven't had some 4850, 4900 level on the S&P, which means it's kind of chill. It's actually, quite frankly, I feel like we have to say this more often, but this is very, very healthy. I mean, we had 2 amazing months in November, December. We're seeing a slight pullback of, what is this, less than 1% on the S&P, like 1.3%. This is very normal. It's very good that this is happening so that we are not having this euphoric bull run, because the more higher we get, the more harder it gets to continue to go higher. And it's providing opportunities for people to salivate on some dips. So it's actually, I think, quite bullish that it's happening like this.
Sound like you're a believer in the idea, though, of that rotation being longer lasting. Money coming out of mega cap winners and going into other unloved areas or small caps or what have you.
Absolutely. And we're actively talking to our clients about right now, because if you didn't rebalance your account so far, you're going to be overweight in technology in those 7 companies. And especially, I have a lot of people who say, oh, no, I've got an S&P 500 fund and a total market fund. I'm good. You have no idea that about 30% of that is those 7 companies. And if you haven't made a change in your portfolio, you're going to want to take some of those profits and add to other areas. I'm not getting out of the Magnificent 7. I just want to take some profits there and take some better opportunities.
What if it's a giant head fake, though? I look at that ISM services today and I say that's the one thing that you cannot have deteriorate. Mm-hmm. This whole notion that, even Janet Yellen, the Treasury Secretary today, said in an interview that we can describe what we're seeing now as a soft landing. And my hope is that it continues. But what if the economy continues to soften a bit more than it is now, still stays out of recession, but continues to be a little bit weak? Doesn't that take some of the oomph off of those other more cyclical and small cap areas of the market?
Not necessarily, because we need the economy to soften to a certain extent so that interest rates do in fact come down, right? Expectations are there, but we need a softening for inflation to continue to come down. It's just we don't want to soften so much we go into recession, right? So it's that kind of that perfect scenario that we need to get into. And I think that's what you saw with the jobs numbers today. It was kind of bringing into reality the fact that, yes, the economy is softening, but we still have a really strong labor market. And I think when people are expecting those 6 to 7 rate cuts next year, they're probably getting a little overly optimistic. I think rates are probably still coming down, just maybe not as much as people had gotten excited about in the last 2 months.
Yeah, I agree with that as well. I mean, look, we are probably getting ahead of ourselves, assuming that we're going to have 6 to 7 rate cuts, but to assume 3 to 4 is still off the table is, I think incorrect. We're going to hear from JP Morgan in a second as well. I want to talk about Apple for a bit, but JP Morgan expects their first rate cut in June, and they have a little bit more of not a bearish take from Courtney Garcia, but a little bit just of a different take in the context of when it's going to happen. But I think she's in the same mindset that it's probably not happening in March as well. So that's something that we're going to look at. Now let's talk about Apple real quick. So this news just broke right before the market open started. Did not see this coming, but this is what we've got. Apple shares fell on some news that the United States is preparing a case against these guys. So Apple shares slid Friday after the New York Times reported that the Justice Department is preparing an antitrust lawsuit against the iPhone maker, which should be filed as soon as this year. The lawsuit, if it comes to pass, will be the biggest antitrust risk for Apple in years. It has been a while since Apple got targeted by the DOJ in a full-on antitrust lawsuit. The agency's lawsuit could target how the Apple Watch works exclusively with the iPhone, as well as the company's iMessage service, which is also solely available on Apple devices. It could also focus on Apple Pay, the company's payment systems, according to the report. Okay, the first sentence of that is weird. The lawsuit could target how the Apple Watch works exclusively with the iPhone. Yeah, it's an Apple Watch. It's gonna work with the Apple iPhone. So that one's a little weird. The iMessage stuff, okay, but obviously, if I made a watch to go with my phone, I'm not gonna let the watch sync up to some Android. That's just good business. That's just kind of dumb. Practical investing. You said Twitter payouts delayed. My Twitter payout was not delayed. I just got paid right now. I got paid $177 if anyone's curious on Twitter. So I don't know where you saw that Twitter payouts were delayed, but it seems like maybe I'm the only one who got paid, but I'm pretty sure I'm not the only one who got paid. It seems like everyone got paid unless there's some official report for that. So Twitter payouts should be coming out to those who get Twitter payouts. Okay, the news comes as investors and analysts have started to fret about the various regulatory risks facing Apple, including new regulations in Europe over the company's App Store control over iPhone software distribution. That's a much more better argument versus the watch. While Apple's share price increased 48% in 2023, our concerns regarding Apple's legal risks have intensified in the recent months, CFRA analyst said. You know what's actually really interesting about this is everyone has been concerned about Apple over the past couple of days, which is why we've seen Apple go from 195 to 180, slowing hardware sales, iPhone adoption being down, Vision Pro potentially not selling as much, Siri being the most basic piece of crap when it should be inundated with LLM technologies via voice. I mean, that's just a no-brainer, and that just hasn't happened. Probably will happen by WWDC. They're going to introduce some type of LLM technology with Siri. That was some reports that came out. But in general, there's been a ton of bearish news on Apple, and this lawsuit is definitely not helping with that. This lawsuit is absolutely not helping with that in the context of Apple. So overall, if you wanted to continue to be bearish on Apple, then you can continue to be bearish on Apple because that report didn't really signal a reason to not be bearish. Looks like we've got some breaking news on Coinbase. Look at this. We got some breaking news on Coinbase. Let's talk about that. This came out at 4:05. It's 4:12. So literally, this news just broke on the market close. One day, I'm going to have the juicy inside scoop and be breaking news stories on the market's close exclusively. And it's going to be really cool because everyone who's here is going to see it. Okay, so Coinbase is planning a pivotal acquisition that will allow it to launch crypto derivatives in the EU. Okay. Let's see. Coinbase plans to offer crypto-based linked derivatives in the European Union, and it's planning to acquire a company with a license to do so. The U.S. cryptocurrency exchange told CNBC exclusively that it entered into an agreement to buy an unnamed holding company which owns a MFID2 license. It's part of a long-standing ambition by Coinbase to serve professional institutional customers. MFID2 refers to the EU's updated rules governing financial instruments. The EU updated the legislation in 2017 to address criticisms that it was too focused on stocks and didn't consider other asset classes like fixed income derivatives and currencies. The license would help expand access to our derivative products by allowing Coinbase to offer them to eligible European customers. Coinbase said in a blog post, which was shared exclusively with CNBC on Friday. So this is real stuff. This came out right from Coinbase 10 minutes ago. As the industry leader in the trusted compliant products and services, we aim for the high standards of regulatory compliance, and before operationalizing any service or servicing any users, the entity must achieve our 5-point global compliance standard. Derivatives could be a crucial battleground for Coinbase. According to the company, derivatives make up 75% of overall crypto trading volumes. Coinbase has a long way to go to compete with large rival Binance, which is a major player in the market for crypto-linked derivatives, as well as firms like Bytebit, OKX, and Durbit. Correct me if I'm wrong, but derivatives are this is like trading options on crypto, right? Am I wrong on that? Like if I wanted to like short Bitcoin, or I wanted to buy like the equivalent of a call or put on crypto, that is what a crypto derivative, because a derivative contract in the equity market is like a call or a put or a call debit spread or something like that, right? According to data from CoinGecko, Binance saw trading volume for more than $56.6 billion in future contracts in the past 24 hours. Wow. That's seismically larger than the amount of volume done by Coinbase. Its international derivatives exchange did $300 million of future trading volume in the past 24 hours. Interesting. Damn, I did not know Binance did $56 billion of future contracts volume on crypto. Philip says, right, these are the people that get liquidated. Yeah, because they operate on leverage or things of that nature, right? Or let me put it in the chat. This is the Coinbase news for those that want to see it. Interesting. So good news for Coinbase, I guess, at the end of the day. Them doing this in Europe is only going to help their transaction volumes. We looked at Coinbase on Tuesday, and we looked at their transaction revenues in Q2 2021 when crypto went to all-time highs or close to all-time highs. And it was $1.9 billion of revenue in one quarter, in 90 days. I mean, just insane. I think these numbers are going to crush. I think Robinhood's numbers are going to crush. I think, if this ETF gets approved, it's going to continue to crush. So still very bullish on that whole narrative playing out. But this is also really good for crypto. Robinhood just launched crypto in the EU. Very good. The EU is actually way friendlier to crypto than the United States, ironically, given how crazy the EU is about like privacy. They're so free and laissez-faire. I definitely said that wrong, but you know what I mean? They're more free on crypto, whereas the United States is a little bit more aggressive. But nonetheless, that is a good thing for Robinhood to launch there and for Coinbase to launch there as well. Okay, cool. Speaking of crypto, I actually want to show this video. This is a clip of Gary Gensler a couple of weeks ago speaking about the Bitcoin ETF. Someone shared this morning, and it was kind of one of the arguments was that, he's very bearish and he's not going to allow this to be through. But if you look at later in the video, he actually talks about how the court has certain authority that the SEC doesn't have. And as a result of that, there still is an argument for why this ETF will be approved. But let's take a look at it. This is Gary Gensler a couple of weeks ago being asked about the Bitcoin ETF. Yoon Bin Frank says, how much revenue will Coin make from ETF launch? Well, Coinbase will not make any revenue from the ETF per se, but their custodial institutional product for Fidelity, BlackRock, Vanguard, etc., to buy Bitcoin via Coinbase for their ETFs that they offer to consumers is where they're going to make the majority of their money. So Robinhood is probably going to make more money than Coinbase when it comes to the ETF, but Coinbase is going to get so many inflows of institutions buying Bitcoin that's where they're going to make a lot of their money. All right, here's Gary Gensler talking about Bitcoin ETFs a couple weeks ago.
Is still hard at work on a number of issues, one of them dealing with a number of filings of spot Bitcoin ETFs. Mr. Chair, I have to ask you this question. There has been a lot.
We did something very significant about the $26 trillion treasury market, which is really the base of our entire capital markets. It's how we fund our government. It's how our Federal Reserve does monetary policy. It's how we maintain the dollar dominance around the globe. And you want to ask me about crypto?
In my defense, Commissioner Ueda also brought up crypto in this open meeting.
Priorities. I mean, the U.S. Treasury market is a very consequential, very important market. Crypto securities are not only much smaller, it's not how we fund our government. It's not how we conduct monetary policy. And for many investors, they've been harmed in that market. And they're being harmed because there's too much non-compliance. It's not just non-compliance with securities laws, it's non-compliance with a raft of other laws. Our sister regulator in the market space, the Commodity Futures Trading Commission, the U.S. Department of Treasury, and Financial Crimes Enforcement. But again, I do ask, and if you look at the focus and the priorities, the U.S. Treasury market and what we did today is really quite important to our capital markets.
Absolutely, and that's why we have discussed it, but you are actively engaging with a number of matters related to crypto specifically. So I think, sir, this is fair game, especially when you are having staff meeting with a number of issuers in recent days.
I'm glad that you at least now agree that the priorities were more to the Treasury market. So what is your question about?
Okay, so as you can see, Gary Gensler was not the most excited about the ETF approval. Now, again, he goes on further in the video to talk about how the courts have certain authority that the SEC is not allowed to overstep, which makes sense because the SEC is just going to get sued by all the courts if they try to overstep it. But as you can see in the chat, you guys are pretty annoyed by it. This is him basically being a dick. I mean, quite frankly, when it comes to this ETF approval. So it's, it is what it is. This is, you could probably make a point of just like, is he actually going to approve it with an attitude like that? And I don't know. Quite frankly, I have no idea. I have no idea if he's actually going to approve it, given that type of an attitude, because I mean, look, when you talk like that, it's kind of hard to believe that the guy's going to do it. But there's still obviously legal arguments, and maybe he's just being mean to be mean. But nonetheless, Euban Frank says OMG shilling treasuries when asked about Bitcoin ETF. Remember, he's concerned about treasury demand when it comes to the U.S. government. So his argument is that if we created a Bitcoin ETF, there would potentially be less treasury demand, and that's his major concern, right? That's part of his agenda. The problem is, even if he ideological feels like this, and he'll go publicly and he'll say all this ideological stuff about how he thinks about the Bitcoin ETFs, blah, 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 you can't deny it based on ideology. There's too much legal vernacular and too much idiosyncratic technicalities in regards to the application of the ETF becoming a reality that would result in a rejection just based on ideological dogmatism, because that could have happened years ago, which it did happen years ago. But now you've gone too far in the process. So I don't think that his bearishness is going to be the ultimate reason he rejects it, but it definitely isn't a good sign the way he talks about it for the people who are super excited for the ETF. So we'll see. We'll see if it ultimately gets approved. Let's take a look from JP Morgan. They are anticipating rate cuts in June, even if it's not right now. I thought this was actually a really sober take on what's happening in the market. So let's take a look at them and then we'll keep going from there. Treasuries have infinite demand. Dex is in the chat. Yeah, that's true. And Bitcoin is not infinite. It is finite. And there's a reason why a lot of people hate it for that reason.
JP Morgan's chief U.S. economist, Michael Feroli. Michael, always a pleasure. Our thanks to you. Good to see you.
Yeah, good to see you.
Is it fair to say that the print reduces expectations for at least a Q1 cut?
I think so. Certainly, I think to get to Q1, you'd really have to have kind of a panic situation or a steep downturn in economic activity. And it doesn't appear that that's a near-term prospect. So I do think this takes Q1 barring any big surprise over the next 2 months, I think this really should reduce the odds of that kind of cut.
Can you bundle household survey, negative revisions, ISM services employment, temp jobs down into a more pernicious narrative?
You can if you're inclined to. I think if you take the average over the fourth quarter, what you see is both job growth and wage growth in the fourth quarter was the slowest of the expansion, but still pretty good. As you mentioned, there are some indicators that we'll probably see further slowing in job growth in the months ahead. Whether that actually turns into a negative number, yet to be seen. But I don't think that doesn't look like a prospect for January or February, at least.
Your counterpart over at Goldman Sachs, Jan Hatzius, was with us a few minutes ago, and he sees a March cut because he says core inflation is powerfully coming down. And that's what the Fed is going to want to see. And it's going to be enough for them to cut and not be so restrictive. Why do you disagree?
So I do think they're in a position to eventually cut. I don't think what we heard out of the minutes earlier this week suggests that that's something they have a plan for as soon as March. I think given the wage number we saw today, they probably want to be a little more comfortable that labor costs are moderating in a more significant way before I think they're comfortable to declare victory, which I think a cut is essentially declaring victory given their well-known reversal aversion. I think they want to be pretty confident that when they start, they're going to keep going.
What is happening on the wage front? Because we got a little bit of a tick higher, 4.1% now growth in December. We're seeing real wages really start to move up, which is good for consumption. Where do you think that goes?
So as I mentioned at the outset, if you look at the quarterly average, it's 3.7% annualized, which is the softest since 2020, but it's still a good number and probably a little bit above what you would want to see to be comfortable that inflation is on a path to 2%. So, as you mentioned, this month we were a little higher than expected at 0.4. There's a lot of revisions to these numbers. That's why I kind of prefer to focus on the quarterly numbers. And as I said, those are moderating, albeit still probably a little bit too hot for the Fed just yet.
So that's why he thinks the first rate cut is coming in June, which is reasonable. I think that's very, very reasonable. Look, there's a good chance it could happen in March if that inflation number takes really low and the Fed's like, all right, we got to do something here. But JP Morgan is of the mindset that it probably happens in June, and then we get another 4 of them by the end of the year. We have some breaking news here as well. Apparently, Bloomberg has reported the SEC to vote on Bitcoin next week. This came out just now. The SEC tells firms to submit final paperwork. That is the breaking news we're getting right now on the Bitcoin ETF. So it seems like the SEC is saying it is time for us to vote on it. Submit your final documents, and we are going to make a vote by next week. Next week's going to be an exciting week, folks. We have CPI next week on January 11th. And that's going to be on, what day is that? That's going to be on Thursday. So we have CPI on Thursday for December. And then you've got this ETF approval on likely next week. At least the voting is going to be next week. If anything, the final decision might be the week after next week. But I would imagine by next week, we are going to be very, very close to an answer for this Bitcoin ETF. If we get a really good CPI print, okay, and then we get a really good decision by the SEC, which is to approve this ETF, next week could be Tom Lee's kind of thesis that we go back to 4,800 in January and we break through. Because if CPI comes in really low, that means we're going to get a March cut. I mean, now it depends on how low. We had 3.1 last month. Could we see 2.9? I don't know. But if we see 2.9, 2.8, you might start thinking, wait a second, the Fed's going to cut in March, and then we're going to front run all the market dynamics. Maybe that'll happen. Maybe that won't happen. And then if you get the BTC ETF approval, then you've got all the crypto stocks. If you have any crypto exposure, that's going to start gaining some momentum. Next week's going to be exciting. Next week's going to be very, very exciting. And I will be here on the Market Open and Market Close every single day discussing what's happening next week. Let's talk about Palantir. I did a video on Palantir. I know some of you guys may have seen that video, but for those that didn't, let me just do a little bit of analysis here. Palantir ending the day at 1598. Look, my thoughts on Palantir and it declining is actually pretty in line with the downgrade that we got today. The downgrade basically said that the go-to-market strategy is flawed. That's all he said. And let me just pull up a tweet where I wrote this as well. His argument was that, okay, the downgrade was based on not them being bearish on AI, but them being bearish on the go-to-market strategy. Lero, I see you in the chat. The StreamYard is working now on Twitter. Yeah, I rerouted the system. I'm trying to make it sound more technical than it was. I just reconnected it. Like I went into the internal architecture of the motherboard and I plugged out the blah blah blah, and then like no, I just re-logged in, and then the Twitter stream should be working now. So we'll be live on Twitter every single day, folks. Every time I'm live on YouTube, I'll go live on Twitter. So for those that like being on Twitter, you'll see me on Twitter. So let's read from what I said a little while ago. One bullish thing about today's downgrade was that Brent made sure to indicate that Palantir's AIP or AI software was not hype or fake or undifferentiated from market alternatives. He acknowledged that their AIP actually was pretty much the real deal. His biggest concern was that the go-to-market strategy and the high multiple given low growth, which I believe is fair. Now, is it $13 fair? The market's going to decide that. But it's fair to say the go-to-market is the issue, not the product. This wasn't an AI imposter bear case. It wasn't Edwin saying that they're not real AI, because I think Brent is a little bit more sophisticated than that. However, the report's timing is very weird. Everyone knows Palantir's growth and sales has been bad, but management has given every indication that they are attempting to change that via boot camps. From everything we are seeing publicly, including customer testimonials, 1,000 participants, 27 industry serves, over 400 boot camps conducted, it seems like they can figure out sales and get growth to reaccelerate. So if his main argument is like, oh, the go-to-market strategy sucks, and it's like, dude, we've known that for a year, and 6 months ago, they told us what they were doing to change it. Why put out this report now? Why not put out this report when Palantir was rising to $21, right? Like, why put it out when it's fallen 30% for more than that since then, right? Like, it's just such a weird reason to put out the report over such a boring argument. So the reason this downgrade was weird is because the management said, hey, we know it's an issue and we're working on it, and then have shown evidence on them working on it. How about we at least give them a quarter to show the results, right? Like, at least we should give them enough grace to give a chance to prove that the boot camps are working. The downgrade would make more sense post Q4 if growth continues to slow. Right now, it's just a boring argument that we all know about and have an answer for already, but are waiting for results. It was a really unoriginal analysis, quite frankly. I mean, it was just quite boring by Brent. Because if you're going to make a downgrade on Palantir, like, make a juicy argument. Don't make an argument that their growth sucks. We know their growth sucks. We are looking for that to change, and we have a reason for how that's going to change, which is their new go-to-market strategy. But that's not going to change overnight. And as an investor, you have to have that decency of patience in order to allow it to happen. And you've been rewarded as a shareholder because the stock was up 160% last year. So it's not like you didn't get rewarded and you're drowning in your bags. You're only drowning in your bags if you bought at 19 and 20. And if you bought at 19 and 20, quite frankly, the valuation debate was a little bit, you just didn't understand the valuation too hard. And a lot of newbies bought in at 19 and 20. They have no idea what an ontology is. They have no idea who Alex Karp is. They just bought in because of AI, right? Those people, if that was your first time buying, you deserve to be down, because it just wasn't the time to buy. Brent says U.S. commercial is slowing down. This was also false. This was bad in the report. U.S. commercial is growing the best, excluding SPACs. It's at 52%, but U.S. government and international growth is bad. So his argument in the report is not egregious, but it's pointing out something we already know. The downgrade really just made juicier prices for long-term shareholders. If Q4 can show they are getting back to growth, then these prices are going to be cheap. The question becomes if Q4 gets us that growth, right? So that's the most important thing. Josh says sold at 20 and buying back in now. Look, I know someone who sold 32,000 shares of Palantir at basically a 15 average. He sold it at $20. And he's been waiting to get back in. And he's very slowly DCA'd back in at this $16 level. But he made like 180 grand off. He made a lot of money. And now he's trying to get back in at 15. And look, if it gets back to 15, it'll be a good move. The problem is obviously it's market timing, right? Palantir could consolidate and it could stay at 17, and this guy could have never published a downgrade. He could go back to 7. Like, anything could happen. But in general, I'm not saying it's the worst move if you sold at 20 and get back in at 15. It's just, I don't know if we get back to 15, and we'll see. We will see. Ben, good week. Amit got to run. Excited for the ETF. Ben, thank you for being here as well. Appreciate you. You can say the same for anyone buying a Bitcoin. That's true, man. If you buy Bitcoin at 45,000 and the sucker drops back to 30, you deserve to be holding that bag because it's up, 160%, or Bitcoin's up like 200 something percent since last year. So where were you buying it? When Palantir was at 7, Palantir was 11, or a Bitcoin was at 27,000, 15,000, etc. It is what it is. Everyone gets their own prices. In general, if the ETF is getting approved, then maybe buying Bitcoin right now is not the worst thing in the world. If the ETF doesn't get approved and Bitcoin falls back to 30,000, then it's a gamble. It sucks. You kind of got to deal with it. Overall, I don't think the downgrade was that big of a deal. I just think the downgrade was something that was inevitably going to happen given the level of growth that Palantir has and their multiple. It's just weird that it's happened now. That's all. It's just weird that it happened now. Like when Palantir was running to 20, why didn't this guy put out this downgrade? I'll tell you why. Because he didn't want to look like a fucking idiot. When Palantir was running to 20, he did not want to see him look like a dumbass. So as a result of that, he was like, you know what? I got to make sure that that I don't put out a price target when the stock's running. So now when the stock has dropped 40% from 21 to 16, now he's like, oh, now the sentiment's bearish. I can make it even more bearish, which is just like, it's just not interesting analysis. It's just not exciting from my perspective, from looking at how an analyst operates. What is the rough year estimate where growth will accelerate? I think by the end of year, growth should accelerate, like Q3, Q4. Their guidance in Q4 of 2023 is going to indicate if they're going to grow in 2024, right? So they're going to do about $604 million in revenue. Maybe they beat that a little bit, which will be, I think, ending the year at 18% year-over-year growth. If they guide for Q1 of, I don't know what the exact number is, but closer to maybe 650, 660 million, whatever it is, then they will be guiding for hopefully 20 to 25% growth for the year. I mean, we're going to get the initial growth outlay from Q4 based on their guidance for Q1 2024. And that's when we're going to know, oh, the bootcamp strategy is working and management is excited, or growth still needs more progress to be done. And maybe it does need more progress, and it'll take a few quarters before that happens. Besides Palantir, what earnings are you most excited for? I'm excited for NVIDIA earnings, Google earnings, Truist Bank earnings, Robinhood earnings, and PayPal earnings, because I own all of those stocks. Robinhood's the one I'm the most excited for, quite frankly. I think Robinhood's going to fucking crush, but it's going to be really excited because if this ETF doesn't get approved, then Robinhood stock is going down. I mean, that's just the nature of what's going to happen. So we'll be seeing what happens there. But, NVIDIA, Google are also going to be very excited. I don't own NVIDIA, but I'm really excited to see if they can keep up the growth. And SoFi, I forgot about SoFi. SoFi's coming up January 29th. We got a date yesterday. Amazon's going to be very exciting as well to see if those margins can increase. The thing about SoFi that's going to be really earning, the thing about SoFi that's going to be really interesting is their GAAP profitability. And if that GAAP profitability is actually going to be the thing that the market has been waiting for. Because if the market is not excited with the GAAP profitability, then the GAAP profitability doesn't matter. And everyone who's been a SoFi bull has been yelling about GAAP profitability, including myself. Let's see if the market's actually excited for GAAP profitability. The funny thing about Palantir is that when the market was excited for Palantir's GAAP profitability, Palantir's GAAP profitability was not even understood. Like no one expected GAAP profitability. When we got GAAP profitability for Palantir, I was flabbergasted in the most positive ways. I was like, oh my God, we got GAAP profitability. For SoFi, everyone's expecting GAAP profitability. I think I've said GAAP profitability like 50 times in the past 2 minutes. But if we get GAAP profits and the market's not excited, it's going to be tough as a SoFi shareholder to see what's excited, to see what's exciting on the to see what's exciting in the future. Because those are the things that the market is ready for. Okay, I think that's it. Let's take one last look at the equity markets. I always sound so official saying equity markets. By the way, thank you to everyone who's joined the Market Close. This is a new show we've started on the channel. I plan to do this for a very long time. And so we're getting about 350 to 400 people on the Market Close every single day. Market Open obviously is in that upper echelon of 800 to 900 people. So we're building it up. I'm really excited to do this Market Close. It's really fun at the end of the day to be able to analyze the markets and see everything that's going on and put the pieces of the puzzle together. So yeah, thank you everybody for joining. It just makes me so happy, and it really means a lot to me. Palantir after hours $16.01. SoFi after hours $8.23. Tesla basically flat for the day, 237.47. Apple is red, Microsoft's red, Nvidia is green. PayPal is actually green today, 60.12. I didn't know PayPal was up 2.86%, but PayPal is up. And S&P 467.92 on the day. Bitcoin 43,782. Verizon $40. Where's Robinhood? Where's my little Robinhood? Robinhood 11.89, flat after hours 0.75%, and Palantir retaining that $16 level, 16.01 after hours, even though it had a rough day to start. Okay, that's it for me. Thank you everybody for being here. We have do you have any goals for your channel this year? I would like to get 50,000 subscribers. I know that's pretty ambitious, but by the end of the year, if we could double the channel, that would mean a lot. And I just, I want to get it to the point where it's a lot more sustainable. So just in terms of the growth and all that stuff. So yeah, the goal is, the real public goal is 50K subs, and it's going to be hard. People think, if you just work at YouTube, you can keep growing. And it's like, yes, that's true, but it's still hard, dude. It's not easy. So we'll see what we have to do. Thank you all for being here. And we have Palantir Weekly tonight. We'll be discussing a bunch of things. I will be live streaming on Saturday. Sunday is probably the only day I'm not going to be live streaming this week. Saturday, I'll probably go live just for a little bit. Talk about markets, just more fun stuff. I think I'll also have an interview with someone on Saturday as well, maybe in the morning, 12 p.m. Eastern. But outside of that, I'm pretty much done for the week, and we will have Palantir Weekly at the end of the day. All right, that's it. Thank you all for being here. I appreciate it. Sue, have a great weekend. Sue, thank you for being here as well. Enjoy your weekend, folks, and we'll see you later. Kelly, thanks for joining at the very last minute. All right, everyone. Have a good one. I'll see you later today. Good night.